Cryptocurrency is a new kind of money. Unlike traditional currencies which are issued and regulated by governments and central banks, cryptocurrencies operate on a decentralized network using blockchain technology. This means that no single entity has control over the entire network, making it more resilient to manipulation and interference. It is digital, like an email or a photo online. You can store it in a digital wallet on your smartphone or computer, and it exists only in electronic form. This makes it incredibly convenient for online transactions and transfers, as you don't need to carry physical cash or cards. But it is also money, like dollars or euros. You can use it to buy goods and services, and its value can fluctuate based on market demand. Just like traditional currencies, cryptocurrencies can be exchanged for other currencies, allowing for international trade and investment. Cryptocurrency is different from regular money. Traditional money relies on banks and financial institutions to process transactions and maintain records. In contrast, cryptocurrency transactions are recorded on a public ledger called the blockchain, which is maintained by a network of computers around the world. You don't need a bank to use it. This means that people who don't have access to traditional banking services can still participate in the global economy. All you need is an internet connection and a digital wallet to start using cryptocurrency. You can send it to anyone, anywhere in the world. This makes it an excellent option for international remittances, as it can be faster and cheaper than traditional methods. You don't have to worry about exchange rates or bank fees, and the transaction can be completed in a matter of minutes. It is also very secure. Cryptocurrencies use advanced cryptographic techniques to secure transactions and control the creation of new units. This makes it extremely difficult for hackers to alter the transaction records or create counterfeit coins. Cryptocurrency uses special codes to keep it safe. These codes, known as cryptographic keys, are used to sign transactions and ensure that only the owner of the cryptocurrency can spend it. This adds an extra layer of security and trust to the system. This makes it hard for anyone to steal or counterfeit. The decentralized nature of the blockchain also means that there is no single point of failure, making it more resilient to attacks. Even if one part of the network is compromised, the rest of the network can continue to operate normally. Cryptocurrency is changing how we think about money. It challenges the traditional notions of currency and finance, and opens up new possibilities for innovation and economic growth. As more people and businesses start to adopt cryptocurrencies, we may see a shift towards a more decentralized and inclusive financial system. It is a new way to pay for things and send money around the world. Whether you're buying a cup of coffee at your local cafe or sending money to a family member overseas, cryptocurrency offers a fast, secure, and convenient alternative to traditional payment methods. Imagine a digital coin. You can't hold it in your hand, but you can use it to buy things online. That's cryptocurrency. These digital coins are stored in a special digital wallet. You can use your wallet to send and receive cryptocurrency. Cryptocurrency works without banks. It uses a special technology called blockchain. Think of blockchain as a big, secure online ledger. This ledger keeps track of every cryptocurrency transaction. It makes sure that everything is safe and transparent. Cryptocurrency is important for many reasons. It represents a revolutionary shift in how we think about money and financial transactions. Unlike traditional currencies, which are controlled by central banks and governments, cryptocurrencies operate on decentralized networks using blockchain technology. This means that no single entity has control over the entire network, making it more resilient and less prone to corruption. First, it gives people more control over their money. With cryptocurrencies, individuals can store and manage their funds without relying on banks or other financial institutions. This is particularly empowering for people in regions where banking services are limited or unreliable. By using a digital wallet, anyone with a smartphone can participate in the global economy. You don't need a bank or government to use cryptocurrency. This decentralization means that transactions can be made directly between users, without intermediaries. This not only speeds up the process, but also reduces transaction fees, making it more cost-effective for users. This is especially important for people who don't have access to traditional banking. In many parts of the world, people are excluded from the financial system due to lack of infrastructure or stringent regulations. Cryptocurrency provides an alternative, allowing these individuals to save, invest, and transfer money with ease. Second, cryptocurrency is global. You can send it to anyone in the world instantly and cheaply. Traditional cross-border transactions can be slow and expensive, often involving multiple banks and intermediaries. Cryptocurrencies eliminate these barriers, enabling instant transfers at a fraction of the cost. This is particularly beneficial for remittances, where migrant workers send money back to their families in their home countries. Finally, cryptocurrency is transparent. All transactions are recorded on the blockchain, a public ledger that anyone can access. This transparency ensures that all transactions are verifiable and traceable, reducing the risk of fraud and corruption. This makes it difficult for anyone to cheat or steal. The blockchain's immutable nature means that once a transaction is recorded, it cannot be altered or deleted. This provides a high level of security and trust, making cryptocurrencies a reliable option for financial transactions. In summary, cryptocurrency offers greater control, global accessibility, and enhanced transparency, making it a significant innovation in the world of finance. Bitcoin was the first cryptocurrency. It marked the beginning of a new era in the world of finance and technology. Before Bitcoin, the idea of a decentralized digital currency was just a concept, but Bitcoin turned it into reality. It introduced the world to the possibilities of blockchain technology, which is the backbone of all cryptocurrencies today. It was created in 2009 by someone using the name Satoshi Nakamoto. The true identity of Satoshi Nakamoto remains a mystery to this day, adding an element of intrigue and mystique to Bitcoin's origin story. Nakamoto's white paper, titled Bitcoin, a Peer-to-Peer Electronic Cash System, laid the foundation for what would become a financial revolution. The creation of Bitcoin was a response to the financial crisis of 2008, offering an alternative to traditional banking systems. Bitcoin is like digital gold. Just as gold has been used as a store of value for centuries, Bitcoin is now seen as a digital store of value. It is often referred to as digital gold because of its limited supply and its role as a hedge against inflation. Unlike traditional currencies, which can be printed at will by central banks, there will only ever be 21 million Bitcoins in existence, making it a scarce and valuable asset. There is a limited supply of Bitcoin, and it is valuable because people want it. This scarcity is one of the key factors that drive its value. As more people become aware of Bitcoin and its potential, the demand for it increases, which in turn drives up its price. The concept of scarcity is not new. It is the same principle that makes precious metals like gold and silver valuable. People use Bitcoin for many things. It can be used for everyday transactions, such as buying coffee or paying for services. Some businesses accept Bitcoin as a form of payment, allowing customers to use their digital wallets to make purchases. Additionally, Bitcoin can be used for international transactions, providing a faster and cheaper alternative to traditional banking methods. Some people buy and sell Bitcoin as an investment. They see it as a way to diversify their investment portfolios and potentially earn significant returns. The price of Bitcoin has been known to be highly volatile, which can lead to substantial gains or losses. Investors often compare Bitcoin to stocks or real estate, viewing it as a long-term investment that could yield high returns. Others use it to buy goods and services online. Many online retailers and service providers now accept Bitcoin as a form of payment. This includes everything from electronics and clothing to travel bookings and digital services. The use of Bitcoin for online purchases offers a level of anonymity and security that traditional payment methods may not provide. Bitcoin is becoming more popular every day. As more people learn about its benefits and potential, the adoption rate continues to grow. This increased popularity is also driven by media coverage and endorsements from high-profile individuals and companies. The growing acceptance of Bitcoin by mainstream financial institutions further legitimizes its use and encourages more people to invest in and use Bitcoin. It is a revolutionary technology that is changing the world. Bitcoin and the underlying blockchain technology have the potential to disrupt traditional financial systems and create new opportunities for innovation. From decentralized finance, DeFi, to smart contracts, the applications of blockchain technology are vast and varied. Bitcoin has paved the way for a new era of digital finance, and its impact will be felt for years to come. Section 5. Ethereum, building new things. Ethereum is another popular cryptocurrency. It is different from Bitcoin in some ways. Ethereum is like a platform for building new things. People can use Ethereum to create smart contracts and decentralized applications, or dApps. Smart contracts are like digital agreements that automatically execute when certain conditions are met. dApps are applications that run on a decentralized network. Ethereum is opening up new possibilities for the internet and the world. Section 6. Using crypto every day. More and more people are using cryptocurrency every day. You can use it to buy things online, send money to friends and family, or even invest in your future. Some businesses accept Bitcoin or Ethereum as payment. You can even buy coffee with cryptocurrency at some coffee shops. Sending money with cryptocurrency is easy and fast. You just need the recipient's wallet address. You can send money anywhere in the world in minutes. Section 7. Crypto is for everyone. Cryptocurrency might seem complicated, but it is becoming easier to use every day. There are many resources available to help you learn about cryptocurrency. You can find articles, videos, and even online courses that explain cryptocurrency in simple terms. Don't be afraid to ask questions and explore the world of cryptocurrency. It is a fascinating and rapidly evolving technology that has the potential to change the world. Section 8. The future of money. Cryptocurrency is still a relatively new technology, but it is growing rapidly and evolving every day. Some people believe that cryptocurrency will eventually replace traditional money. Others believe that it will coexist with traditional financial systems. Only time will tell what the future holds for cryptocurrency, but one thing is for sure, it is a disruptive technology that is here to stay. Section 9. Keep learning. This is just a brief introduction to the world of cryptocurrency. There is much more to learn and explore. Do your own research, stay informed, and be cautious. The world of cryptocurrency is exciting, but it is also important to be aware of the risks. The future of money is here.